All right, so we've seen futures moving higher. They all off of their highs of earlier, but higher across the board right now. I want to ask you, has something fundamentally changed? Investors seem to be more confident than they were just a few days ago, but still two rates, inflation's sticky, the Fed actually lowering its growth outlook. Has something meaningfully changed to the upside when it comes to the economy in your mind?
No, market goes up, goes down, goes all around day to day. I don't think it's gone very far. I mean, it's still down quite a bit from where it was a few months ago. The tariff war is still on. Uncertainty continues to prevail. All the sentiment indicators coming out for consumers and businesses remain very iffy, very dark. So no. I mean, I think if the tariff goes in as the president has articulated them, reciprocal tariffs, broad-based in early April, and they stay there, it will do a lot of damage to the economy and the stock market. If the president doesn't do that, the tariffs kind of fade away. I'm not sure how that would happen, but if they were to fade away, I think the damage would lessen and the economy would be just fine. So no, I don't think anything fundamental, Frank, has changed.
All right. I thought it was kind of interesting that Jay Powell said, according to the survey data, he hasn't seen any significant weakening of the economy, but we're hearing a very different story from business leaders. I want to play two takes on tariffs from business leaders that we've heard from. Moments ago, we heard from the CEO of Wix, and yesterday from former Tesla president John McNeil. We're going to play both sound bites and get your take.
It definitely creates a short-term volatility. And, small businesses at the end of the day are the ones who are impacted first by anything that changes in the market, for better and for worse.
The uncertainty around tariffs is the real challenge, because in a long-term capital business like automotive, where it takes years to build factories and billions of dollars, those kinds of production capacity and challenges don't resolve themselves in weeks and months. They take years, and so the uncertainty here is I think what everybody is hoping will get addressed.
So, Mark, your take. Again, the Fed taking a wait-and-see approach, but we continue to hear from businesses that these tariffs are creating a lot of issues for them.
Yeah, I mean, I think what the Fed's doing is right, because it doesn't. Fed officials don't know how this is all going to play out, and it's not, Frank. It's not just about the tariffs. It's about other economic policy. It's about the DOGE cuts to jobs and to funding. It's the fiscal policy. There's a lot of discussion about tax and spending. There's the Treasury debt limit coming up, and that goes to some of their decisioning around winding down their tapering. So there are a lot of moving parts here, and given that, I think it's wise for them to just sit on their hands and wait and see how this plays out a little bit. But you can see the damage that's accumulating. It's not existential or anything. The economy came into the year exceptionally strong, so it could weather a lot of storms. But we're getting some pretty big storms, and as long as those storms are raging, the risk is that something comes undone here, and you can hear from those business leaders, and it's across the board. They're very nervous and worried that if this continues, the trade war continues down the path it feels like it's going down, and the uncertainty around other economic policy remains in place, it's going to do real damage and ultimately will result in them getting off their hands and cutting jobs and investment and pushing us into recession. And that's why recession risks are less than even. I agree with that. I think that's the general consensus, but they're definitely up and they're moving in the wrong direction.
So, Mark, one other part of the Fed decision yesterday was the Fed's decision to taper its quantitative tightening. You called that a surprise, and you say that it signals that the Fed is nervous. What do you think the Fed's nervous about?
Yeah, modest surprise, and we knew they would start to wind down their tapering. I just didn't expect it this quickly at this meeting, and they made it pretty clear. I think they're nervous about the Treasury debt limit battle that's coming up and what that means for how much cash the Treasury has on hand and what that means for reserves in the banking system. And I think they're really, and rightfully so, nervous about what it all means for short-term funding markets. There could be a lot of volatility in short-term interest rates, and they would like to avoid that, obviously. And so I think by beginning the tapering sooner rather than later, they hope to ameliorate those issues.
Wait, Mark, can I ask you a very quick question because we almost have to go? So if the Fed can take action because they're nervous and anticipating something happening in one area, why can't they do that when it comes to tariffs? and perhaps proactively cut rates? I mean, why not take that same approach when it comes to rate cuts?
Well, I think in the case of the tariffs, they're in betwixt and between. There's uncertainty not only with regard to growth, but there's also uncertainty with regard to inflation. So if inflation ends up being higher and more persistent, inflation expectations run up, then the policy response is very different than if the economy weakens and inflation slows. So and transitory. So in that case, the uncertainty is not clear which way it cuts. Should I be more aggressive with rates or less aggressive? With the case of the wind down of the tapering, that's just much clearer. The risks there are just more one-sided.
Okay.